This is Let's Talk Chattanooga Real Estate, the podcast where we cover home buying, home selling, home improvement tips and ideas, market trends and developments, and investing in real estate. If you own real estate in the Chattanooga, Tennessee area, or want to own real estate here, then you're in the right place. Let's Talk Chattanooga Real Estate is hosted by Blake Watson, a real estate agent and investor in Tennessee and Georgia.
Welcome back to Let's Talk Chattanooga Real Estate. I'm Blake Watson with Epic Realty, and today we're talking about saving money as a homeowner. Now, if you own a home here in Chattanooga or in Northwest Georgia, or you're thinking about buying one soon, there's a cost tied to home ownership that has quietly become one of the most painful, necessary expenses in the household budget, and that's homeowners insurance. For years, insurance was just something most of us didn't give a lot of thought to. We just got the insurance policy and moved on. You picked a policy, you escrowed it with your mortgage, and maybe you glanced at the premium once a year when the renewal came in. But that world no longer exists. Over the last several years, homeowners insurance premiums across the country have increased by nearly 70%, and industry forecasts suggest that we're not done yet. They are expected to still rise. Additional increases expected over the next couple of years. For many homeowners right here in Hamilton County and in Northwest Georgia, Catoosa County, Walker County, and surrounding areas, those jumps feel sudden and aggressive, especially when nothing about their house seems to have changed. But behind the scenes, a lot has actually changed, and understanding why insurance costs are rising is the first step to protecting your finances and finding ways to control those costs going into 2026. One of the biggest drivers of rising insurance premiums is the cost to rebuild a home. Insurance companies don't price policies based on what you paid for your house or what Zillow says your Zestimate is, what your home is worth. They price risk based on what it would cost to rebuild that home after a major loss. And since the pandemic, construction costs have surged. Materials like lumber, drywall, concrete, roofing, electrical components, plumbing supplies, HVAC systems, all of it. It's all more expensive today. It's jumped significantly, and the skilled labor to install it or do the carpentry work, do the construction, that has become more expensive and harder to find across our region. Even though inflation has slowed compared to its peak, those higher prices never really came back down. You know, inflation raises prices, but you very rarely see prices actually come down unless there's just a very temporary increase. In many markets in this area, of course, including Chattanooga, Cleveland, Fort Oglethorpe, Lafayette, all around, replacement costs are still roughly 30% higher than they were just a few years ago. And insurers have had to adjust premiums to reflect that new reality. If it costs dramatically more to rebuild a home, it costs more to insure it. I mean, this is the same thing going on with car insurance as well. It's getting a lot more expensive to repair cars. We know that, especially with all of the electronics involved. So because of that higher cost of an automobile and higher cost of repair, well, we've seen auto insurance bills go up as well. It's just a reality in the insurance world. Another factor that is pushing premiums higher with home insurance is weather-related risk. Now, we don't face the wildfire exposures here that are seen out west, of course, and we don't have high hurricane risk, although we had a tragic surprise flood brought on by Hurricane Helene in September 2024 in East Tennessee and western North Carolina. So we are absolutely not immune to weather losses. Anyone who's lived through a few Tennessee and Georgia tornado events knows that for sure. We get the tornadoes, we get windstorms, we get serious hail events, and heavy rain like we had in the fall of 2025 that flooded parts of East Ridge and Brainerd. This happens. We've seen the flash flooding in low-lying areas. We've seen the fallen trees, especially after an ice storm or heavy winds. And insurers look at patterns over time, not just individual claims. And they look across the country where severe weather events are becoming more frequent and more expensive. Even if you personally have never filed a claim on your Red Bank home or your Lookout Mountain home, well, you're still part of a larger risk pool, and rising claims nationwide affect everyone's premiums. There's also the issue of reinsurance, which most homeowners never even think about. Insurance companies buy insurance themselves. It's called reinsurance to protect against catastrophic losses. And over the last few years, the cost of reinsurance has skyrocketed due to global disaster losses, of course, inflation and tighter capital markets as well. So when reinsurance costs go up, insurers pass those costs down to consumers like you and me in the form of higher premiums. On top of that, underwriting standards have tightened. Insurers are much more selective about the homes they insure, how much risk they're willing to take on, and how policies are structured, which is why many homeowners from Hickson to St. Elmo are seeing higher deductibles or more exclusions than they remember from years past. A newer phenomenon that I've experienced with some of my clients is when they are buying a new home, it's possible that they're going to have difficulty getting insurance for that new home. The insurer might take photographs of the roof and decide they think it needs to be replaced before they will insure the home. Sometimes that's arbitrary. I've had one situation where that very thing happened. My client was buying a home and put a new roof on it right away, like within the first week of ownership. And then they got a letter from their insurance company saying that the insurance company had come out and taken photographs and was going to cancel their insurance because the roof needed repairs, according to the photographs. Well, they explained to their insurance carrier that they had just replaced the roof and it was new. Well, the insurance carrier wanted to see proof of that, not through photographs, because they already had photographs of the new roof, but they wanted to have a receipt from the licensed contractor showing that the roof had been replaced and at what date that it happened. So they provided that and they were fine. The insurance company said, no worries, we got you. But that is still an important story because it shows just how selective and careful insurance companies are being in deciding who they're going to insure and how much they're going to charge. One of the most common mistakes that homeowners make in this environment is simply letting their policy renew automatically year after year without ever reviewing it. Shopping your insurance policy is still one of the fastest and most effective ways to potentially lower your premium. And in this environment, I'm going to say it is mandatory that you carefully inspect your declarations page, review it with your insurance agent. Most insurance agents should proactively discuss with you any increase that's coming on your insurance bill, but whether your agent contacts you or not, you need to make sure you speak with them and review your policy every year. If it's been more than a year since you compared quotes, there's a good chance you're paying more than you need to. Sometimes the savings come from switching carriers, switching insurance companies, and sometimes they come from rewriting coverage language or adjusting how a policy is structured. That's where your insurance agent can help you. Even staying with the same company but reviewing your options can result in savings. It happens all the time. And often bundling the home and the auto insurance can help, but it doesn't always produce the best deal. So it's important to compare bundled prices with separate policies rather than assuming that the bundling automatically wins. That's not an automatic, not anymore. Another lever that homeowners often consider is raising their deductible. A higher deductible usually leads to a lower premium, but this strategy only works if you have the savings to comfortably handle that deductible after a loss. So if you save a few $100s a year because you have a higher deductible, well, it doesn't help much if you're suddenly responsible for several $1,000s out of pocket when a claim happens. It's important to be realistic about your emergency savings and your risk tolerance before going this route of raising your deductible. Beyond shopping and deductibles, one of the smartest long-term strategies is making upgrades that reduce risk in the eyes of the insurer. Remember, I told you about the roof situation. The insurer wasn't even going to insure the property, thinking that it needed a new roof. Once it was proven that a new roof had been installed, they were fine with it. Everything was good. A new roof is one of the biggest factors that insurers consider. And certain roofing materials like a Metal roof can sometimes qualify for better rates once they're properly documented. Insurers care about how likely your roof is to survive a storm here in the Chattanooga area, not just how it looks. Home security systems can also lead to discounts, especially monitored systems, but those discounts are rarely applied automatically. You have to let them know. Homeowners need to notify their insurer and provide proof of installation. Other upgrades like storm-rated doors, impact-resistant windows, updated electrical systems, and proper drainage around the property can also help reduce risk. They're certainly going to help you reduce the risk of having a claim. And nationally, some insurers emphasize wildfire mitigation. But here in our area, that's far less relevant, even though I'm just remembering not even a decade ago, those incredible wildfires that went through western North Carolina and East Tennessee and wiped out much of Gatlinburg. I mean, it happens even here. But that's not a main focus for the Chattanooga area. What's much more relevant is wind, water, and structural resilience against the weather patterns that we actually face. Where homeowners get themselves into real trouble is trying to save money by cutting the wrong types of coverage. One of the most dangerous moves is switching from replacement cost coverage to actual cash value. Actual cash value policies factor in depreciation, meaning the insurance company pays what your damaged items were worth at the time of loss, not what it costs to replace them today. Back to looking at a roof, if you have an actual cash value policy that's insuring your roof, well, after 10 years, your roof is worth a lot less than it was when it was first installed. So maybe you're going to get $5,000 from the insurance company, but you're going to have to pay $15,000 to put a new roof on the house. So with current construction and material prices here in the Chattanooga area, that difference can be enormous, literally. Replacement cost coverage is more expensive, but it's designed to make you whole after a loss, not leaving you scrambling to cover a massive shortfall. And isn't that why we buy insurance? So that we can be made whole after a loss, not have to come up with another 10 grand? Underinsuring the dwelling itself is another common and costly mistake. Market value and rebuild costs are not the same thing. Your home in Ooltewah might sell for one number, but it might cost significantly more to rebuild due to labor, materials, and code requirements. If your coverage limits haven't kept up with rising construction costs, you could be tens of thousands of dollars short after a major claim. That's why it's critical to review your dwelling coverage, often called Coverage A, every year. And I know of a story just a few years back from the Easter tornado in 2020 in the Holly Hills subdivision there in East Brainerd. A home that was destroyed, not quite leveled, but had to be cleared. But the home was unlivable and could not be properly repaired. Well, the homeowner was underinsured, significantly underinsured. And there is still not a home on that lot where that house was destroyed. Their insurance would not cover a rebuild because they were significantly underinsured. Even at the maximum level, the maximum loss, they still only had maybe $150,000 in insurance, but their house was going to cost $450,000 to rebuild. That's why it's critical to review your dwelling coverage every year. Homeowners should also pay close attention to what their policy doesn't cover. Many policies exclude sewer or drain backups unless you add a specific endorsement. Water damage claims are among the most common and expensive, and this is a gap that catches people off guard all the time. And speaking of water damage, there's a difference between the water damage that's caused from something inside the home, like a burst pipe, or the damage that's caused by flooding, which is any surface water, even if it's coming off of your neighbor's property, some kind of water that's seeping into your house from the exterior, not something that was originated inside your house. So that's going to require flood insurance. And that is especially important in low-lying areas or areas that are downhill from a large ridge or a mountain. And it's very inexpensive coverage if you don't live in a flood zone. Now, if you live in a flood zone, Your mortgage company is probably requiring you to have flood insurance. That's normal. However, if you don't live in a flood zone, it's still wise to consider flood insurance because of this possibility of surface water running off from areas that you wouldn't even expect, as opposed to just flash flood water rising from the ditches and the creeks around you. Deductibles also deserve careful review. In many policies, wind or hail damage carries a separate deductible that's higher than the standard deductible, and homeowners don't realize this until they file a claim. That's when they find out. The big takeaway is that homeowners insurance is no longer a passive expense. It's something that requires active management, and rising premiums are frustrating. They put pressure on household budgets throughout the Chattanooga area. You're not alone, but you cannot ignore your policy or blindly cut some of the coverages, and that can be much more expensive in the long run if you do that. So just review your policy annually. Review it yourself, review it with your agent, and understand what you're doing. I'm not an agent, so I can't advise you on that, but it is important that you review it and understand as best you can all the elements. Consider thoughtful upgrades that reduce risk and have a willingness to shop around. That can help soften the impact of rising insurance costs, even in a challenging market. And if you have questions about how insurance costs affect buying, selling, or owning a home here in the Chattanooga or Northwest Georgia area, well, I'm always happy to help you. You can reach me, Blake Watson, directly at 423-315-1815. You can visit athomechattanooga.com. That's my website, athomechattanooga.com, or connect with me on Facebook or LinkedIn as Blake Watson and on Instagram as Rock and Roll Blake. My office phone is 888-893-3537. Thanks so much for listening to Let's Talk Chattanooga Real Estate.